Welcome back, ladies and gentlemen. It's the second quarter earnings that are upon us, and tracking earnings at IREDA. This is a central public sector enterprise Navratna, where second quarter profit has surged 36% to 387 crore rupees. Revenue from operations is up 38.5%. Loan sanctions have surged more than 2 times, and of course the net NPAs have also come down dramatically. So all put together, this is a wonderful set of numbers that the NBFC, which finances new energy businesses, has done. With us is Chairman and Managing Director Mr. Pradip Kumar, here to discuss the quarterly numbers. Namaste and a very warm welcome to you, Mr. Kumar. Festive greetings from Business Today to all the employees and customers at IREDA. I'm sure this is a wonderful performance that you've come up with. Please explain to our viewers how come you were able to expand profit by 38%. What were the drivers behind such strong growth, and do you see them continuing for the quarters ahead?
Thank you, Mr. Sailendra and your team. And first of all, I'm very wishing you all and the viewers Mahastami as well as Mahanavami. I think I came to know today both events are there. And coming back to the topic, what you were asking, the growth, and probably since last 18 quarters, quarter to quarter growth we have been exhibiting. Significant point in the growth, I can tell the difference what it is. If you see the CAGR of last 4 years of loan book, it was 27%. Whereas the Q2 to Q2 comparison, if you see the loan book, it is 36%. And net interest margin, if you see, net interest income, which used to be CAGR of 20%, whereas here it is now Q2 to Q2 of 2 years, it is in the range of 35%. So therefore, our growth is happening, and rate of growth is also gradually increasing. And every quarter we are setting a new benchmark for ourselves, not only on the numbers, but also on the speedy reporting of the result. If you see the last quarter, we did in 12 days, and this quarter we are giving it 10 days time. And we came to know incidentally, probably TCS also have done yesterday. So we never look at any other company as far as our business is concerned. Since we are the largest pure play green finance company in India, and we are the oldest, and we are most matured as far as skill is concerned. So therefore, business getting into the numbers, growth is automatic to us now, provided we maintain the discipline and attitude and simplicity, that DAS principle we follow. When I talk about discipline, the discipline by the developers. That since the sector is new and challenging and emerging largely, so we have to have a fair amount of discipline. And when we talk about attitude by the lender to act as a business partner, because 70% stake in the project is ours through debt, at times even 75 and 80%. So we need to be proactive and timely to take the course correction, if any, or financing support, whatever is required. Third and most important, whenever any policy, be it the government or regulators, simplification of that, we work holistically in this line, and that has been our strength since last 3 to 4 years. And in the time to come, we are going to maintain that. And in the future quarter 3 and quarter 4, historically, the Q3 is always better than Q1 and Q2, and Q4 is better than rest 3 quarters. So therefore, we'll continue to exhibit that kind of better numbers and better quality governance and better asset quality in the time to come also.
Okay, that's such a wonderfully optimistic hope that second half is better than the first half, and of course Q4 is always better than Q3 and Q2. I'm sure, Mr. Kumar, you always believe this, that there is some kind of a divine, how should I say, help coming in from all sorts of quarters, where you are able to show such consistently robust growth quarter on quarter and year on year. I would like to understand as to how this loan book has grown by 36% year on year to 64,564 crore rupees. Where have the maximum sanctions gone to geographically and project wise?
See, if you see geographically, more than 5% of our portfolio is in western, southern, and northern region. Eastern and northeast, it is not significant as far as geography is concerned. And as far as functionally or sectoral is concerned, around 57% of our asset is coming from wind, solar, and hydro. And 19% is coming from emerging segment, which is your ethanol, CPG, e-mobility, storage, etc. And 24% is coming from state utilities. So, by and large, this percentage, gradually this emerging is increasing. It used to be 17, 18, now it has reached to 8, 19. And in the time to come, there might be slight improvement in the emerging one, because the emerging space, the projects are risky and challenging. Since we have the expertise of handling this sector since 37 years, so which are vanilla today, they were also challenging 15 and 20 years back. And we have successfully handled those. So now also which are emerging, we are taking enough due diligence and close control, close review and monitoring in place, particularly in the new and emerging assets when we are financing, so that we can handle them properly. And at the same time, any kind of carelessness or casual approach by the developer, that can also be plugged in. So therefore, in the time to come, we'll continue to maintain, maybe in the vanilla RE space, which is now 57, vanilla means that is wind, solar, hydro, that may slightly come down because there is a cutthroat competition in that space, because normal banks are also getting into this space. Other NBFCs in government as well as private, they are also coming into this space. But as far as new and emerging is concerned, we will have a significant role to play, because we are the only extended arm of our ministry, that is Ministry of New and Renewable Energy. Therefore, our role will be significant there. So in those space, risk is more. So interest loading, as per the RBI norm, if there is project risky, you have to load the risk premium to that. So we have fair amount of interest margin also. So if you see, gradually our NIM also slightly improving. We have that 3 to 3.5 range. Within that, we are gradually improving, and we are not focusing on only improvising the NIM or something. We are focusing on how to speed up this 300 gigawatt. And in connection with that, we have realized that this retail RE space, there was no banker or bankability facilities there much. So we had requested our government to give us consent that we can open a retail subsidiary, so that we can cater to the hardcore retail renewable activities in the country, which we are not doing earlier. So we have received the consent yesterday.
Right.
We are working, and that will be purely, mostly in a high-tech manner. And I can tell you one line, that will be blend of IREDA, fintech, microfinance company, small NBFC, small self-help group, that kind of combination. And it will be full system-based managed company. So therefore, we have segregated that from our main business. Apart from that, we have already set up an office in GIFT. We are getting the consent to start business very soon there.
Yes, sir. Right. Let's get into this retail subsidiary business, Mr. Kumar. For borrowers such as our viewers and of course retail customers, what are the kind of businesses that IREDA is looking to finance? Is there a ticket size that you have in mind, and what is the nature of this business that you would be financing?
Okay. See, when we are talking about retail, hardcore retail, deep down retail we'll be going into, but we cannot go straight away. We have to take a strategic partner in those area, those who are having local area good presence, like we had already done in the past to e-rickshaw. So similarly, we will go to that e-mobility space, or like rooftop solar, Kusum. Already we are doing Kusum and rooftop solar, but that is who are in aggregator mode. But we can go to now deep down, which is hardcore retail. So what we can do? We can do a kind of strategic partnership with those agencies who are having those local area presence, to cater to the front end activity. In the back end, our SOP, our due diligence, our project appraisal, our IT system, those will be there. So it will take some time, but to go to complete hardcore retail, it will take some more time. But since we have already started rooftop solar and Kusum, that can immediately take the load. And all kind of retail we want to capture in that area. Because we have been focusing in project finance area since 37 years. And we have realized in the country, there is a huge gap for banking in those space. And around 8 lakh crores of business in 5 to 6 years, we are envisaging in the country. This is a rough estimate. That is available. And with that, if you see in project financing, we have around 11-12% market share. Simple, if you go with that around 80,000 to 1 lakh crore, we may get, but that time will tell. Because we want to make a foolproof system-based approach management in that organization.
Okay. Mr. Kumar, what is the internal rate of return that IREDA has benchmarked itself for this retail operation? And is there a minimum ticket size that you're looking at? When you look at an e-rickshaw, that is about something like 1 lakh rupees. A rooftop solar project would be 2.5 lakh rupees. What is the internal rate of return and the average ticket size that you're looking at?
शैलेंद्र जी, अच्छा हुआ आपने ये टिकट साइज पूछा. लोगों को एक भ्रम है कि हम सिर्फ बड़े प्रोजेक्ट को करते हैं. हमारा छोटा सा छोटा 4-5 करोड़, आई थिंक करोड़ प्रोजेक्ट ऑल्सो वी आर डूइंग, which people do not know. And when we will go to retail, why not even 1 lakh or 50,000, why not to catch that? Because we will have a system. So we want to see that every retail space is getting connected with the banking directly through IREDA or indirectly through IREDA.
Yes, I agree with you, sir. I think one of the finest growth areas that is there in the country is in the renewable space at the retail level. The first announcement that Prime Minister Modi made after winning his historic third term was that he wanted to see 1 crore households having rooftop solar. That itself, Mr. Kumar, is a huge market for IREDA, and at a time when the government is backing the solar initiative, you have electricity being purchased by how should I say the service providers. This is a no-brainer. I am so happy to hear that IREDA is actually entering this space.
See, last 37 years we only focused on project finance. We focused on making the technology bankable. So that was our objective. And we are a very small manpower size organization, hardly 169 employees are there. And if you want to do retail in one state, we may require more than 169 employees. So that is completely altogether a different ball game. But there is a game available there, and we can extend and reorient ourselves to cater to that space. So that is the reason we wanted that we will have a completely different kind of setup, organization, set of practices, policies, process and procedures to cater that. See, somebody applying for 1 lakh rupee loan in a retail, somebody applying 1,000 crore, if my same officer will appraise, definitely they cannot do justice to that. And we need to have integration with those agencies who are already having retail expertise, but they are not having renewable expertise. So that kind of integration we'll be looking for. So that reason I said we'll be having partnership kind of thing with microfinance companies or self-help group, whoever is the aggregator available in particular locality. Since retail is a local area kind of command and competence, we'll be connecting to that. It will take some time. Definitely our objective is that every household should have rooftop. Every household, if they can connect with some waste to energy kind of thing, they can do that, bioenergy. And every individual should ride an e-bike or e-scooter, at least not through fossil fueling of any kind of mobility. So that is what the objective. Then only we can reach to true renewabilization and decarbonization.
Okay, so all the best for this new venture. I'm sure in the next 3 quarters or so, I'm sure IREDA will come up with some qualitative and quantitative numbers in this foray. Mr. Kumar, at the same time, when you are showing such strong growth in loan disbursements and newer and bigger projects, of course, you need funds. There was this stock of 5,000 crore rupee QIP, which the government of India would reduce its stake and provide that funding to you. What is the progress on that one, and when do you see it being completed?
See, we did this rough estimate to, I think, couple of months back. So it was 4,500 crore. That was a tentative figure. We had requested Government of India up to 10% permission for diluting their holding, so that whatever fresh equity will come, natural dilution will happen. So Government of India has approved for up to 7%, either in one tranche or multiple tranches. And we have a plan to go to the market post our December result, and January or by end of February, we'll be raising further fresh equity. That 4,500 may get modified, but exact number, what it will be, 5,000, 6,000 and not, that we'll see. 7% is known, and since QIP decision has already been taken, QIP will be coming from the SEBI's mathematics of last 2 weeks trading price, and on that we'll be allowed up to 5% of discount. So we'll take a call, we'll have a close interaction with the intermediaries, and we'll sense the market what it is and how it is. We are very quite fortunate. Since last 1 year, we got listed in November, so almost going to be 1 year. The investors had exhibited fair amount of trust and confidence our management, and we have also responded to them by ensuring highest quality assets and highest quality management through speediest reporting of the result. Like I think we are the only company in India in banking and non-banking space who has published their result yesterday within just 10 days. So, and we are gradually improving that. So investors' confidence is there, management's approach to take the improvement in quality management. In NBFC, if these two are there, only constraint is that bringing equity. So what we can do by to have a enhanced net worth, we have to go for fresh equity. So by the year end, we'll add fresh equity, and also we are now having S&P international rating done. So we can go to the overseas market to look into those green fund houses, how to bring those funds at a cheaper rate. And maybe from November, December onwards, we will be proceeding to the global market for raising debt through them. Our earlier assessment of going to the market this year towards debt was 22,500. That figure also may go up, but we'll take a call what kind of PA, because we are having fair amount of business opportunity with us, and we want to enhance our manpower also, because 169 is not a good size. 4 years back, we had 179 manpower and we had 22,000 book size. Today, we have 169 manpower and our book size is 65,000, 64,500 crore. So we have one huge amount of automation. Perhaps we are the only project finance company in India who is having a zero paper office. Our entire business activity is having in a paperless mode. So that has enabled us to improve our effective output of our employee, and we'll be adding manpower, and we are very conscious in that. We'll be adding qualitative manpower, and we'll be continuously improvising our IT system, because gradually and continuously our regulator RBI or SEBI, they are quite strict on qualitative corporate governance. So therefore we have exhibited, we want to sustain that. So we will be adding further manpower to it, further equity to it,
Right.
and we'll cater to this retail business as well as gift city business in addition to what we are doing now.
Okay, let's look at the net NPA picture, Kumar Sahab. They've come down to 1.04% from 1.65%. Now, is this only because loan dispersals have gone up, therefore the denominator is up and the actual number therefore looks at a reduced percentage, but have actually you been able to get defaulters to pay you back?
It is mix of both. If you see, if you are seeing 2 years, it will not get the correct picture. If you see 4 years, it was 7.18, the net NPA, March 20. Net NPA was 7.18. And the total NPA was around 2,400 crore, which has come down to 666 crore. So number of loan book size has grown up, as well as we have sorted out dozens of old our NPA account. And in majority of the cases, most of the cases rather, we have not gone for any haircut. Either we have received principal and simple interest or principal or cost of borrowings. So by and large. So therefore, both the areas we have improvised. by enhancing the loan book and reducing the percentage, that is not just achievement of net NPA reduction. We have achieved both.
Okay. Mr. Kumar, as usual, the performance has been fantastic, and IREDA, which is one of the most well-performing IPOs in the market over the last 18 months or so, has delivered stunning results, not only for its customers, but fabulous returns for the shareholders. Mr. Kumar, all the best for the coming quarters for your retail venture, and may you get heavy oversubscription when it comes to your QIP, and of course may the best of ESG funds globally start investing in IREDA. Thank you so much for your time, and here's wishing you all the best.
Thank you very much. Thank you very much, Mr. Bhatnagar.
That, ladies and gentlemen, was Mr. Pradip Kumar, Chairman and Managing Director at IREDA, India's only green NBFC owned by the government, and a fantastic IPO which was launched, I think, at 32 rupees, got listed at 50 rupees, went all the way high up to 320 rupees, and is now at 233. Stay tuned to Business Today Television. There is a lot that's happening on the other side of the break. TCS, the flagship of the group, announces its second quarter earnings. What are you looking forward to with TCS in particular, and broadly with the